Good morning, everybody. My name is Brendan Gilmore from BPG Strategy, and I'm delighted to be back involved with this year's FinTech Talent Building Societies event, which seems to be getting bigger and better every year. So congratulations to the team. The panel this morning is about the opportunities and challenges of driving digital in smaller building societies. Clearly, the size, the shape, the stage of maturity that each society is at has an impact on going digital. And that's what we're trying to address this morning. With me, I have four great panelists. I have Rich Wainwright, who's the CEO of Mutual Vision, Tim Bowen, who's the CEO of Penrith Building Society, Will Carroll, who's the CEO of Monmouthshire Building Society, and Rob Pheasey, who's CEO of Marsden Building Society. So I'll hand over to them now, but just for your own benefit, if you could add questions or comments into the panel on the side, into the chat, we can try to address those as we go along. So first off, Tim, perhaps you could introduce yourself, please.
Yeah, morning, Brendan. Tim Bowen. I'm in my fourth year now as CEO of the smallest building society of the 43 remaining building societies at Penrith. Background for me previously was predominantly Lloyd's Banking Group and TSB. In terms of Penrith, just the one branch for us up in Northern Cumbria. About 7,500 members, deposits of about 115 million, and a mortgage book approaching around 100 million. In terms of our digital journey as the smallest, our focus, quite honestly, has been about implementing solutions to create further streamlining and efficiencies within our business, along with things like enhancing and improving our front-end functionality for our savings members, borrowers, and obviously the mortgage intermediary partners that we're working with. More recently, we've added a solution to our business to build capability with regards to understanding what we see now as our biggest asset, which is our data. So yeah, that's me.
Thanks, Tim. Over to you, Will.
Hi there, everybody, and good morning. My name's Will Carroll. I'm Chief Executive of Monmouthshire Building Society. I've also been Chief Executive for 4 years at the Society, but I've been at the Society now for 17 years. Prior to becoming Chief Executive, I worked my way through the finance line and was Finance Director from 2009. So Monmouthshire Building Society is a medium-sized building society, around about £1.45 billion worth of assets at the moment, with 80,000 members across. Our branch network is 11 branches and 13 agency across our core region of South Wales. So our vision as a society is to become an innovative and exciting modern mutual. So we are on a digital journey. I think we've got a long way to go. Tim mentioned the customer, colleague, and broker sort of opportunities that are there. We're looking at all areas of digital at the moment, and as I say, we're on progressing through that journey. So thank you very much.
Thanks, Will. And finally, from the CEO of the Building Society, Rob.
Morning, Brendan. Hi, I'm Rob Pheasey. I'm Chief Exec of Marsden Building Society. I've worked for the Society now for 3 decades. I've been CEO for 6 years. In terms of the Society, well, we fit quite neatly between Penrith and Monmouthshire. So we have a balance sheet of around about 690 million. So touching distance of our milestone at the end of the year. We have 8 branches, predominantly across the northwest. We have approximately 40,000 members. Our deposits book is around about 570, and our lending book just over 602. And as a society, we've been growing quite strongly. Our growth rate, certainly over the last 4 years, we'll see the society grown about 50%. So the use of new technologies, both for customer and colleague, are really, really important to us. In terms of our digital journey, we've covered a number of issues as an organisation. So we are materially now outsourced to the cloud across all our core service provision, which raises interesting challenges ahead. From a customer perspective, we're online for mortgage retentions, we're online for savings, and we support our intermediaries through our online portal as well. We're invested in terms of our understanding around data, and we have platforms that are running now to give insights, not just on our own data, but across the competitor landscape as well. And from a colleague perspective, we're investing in insights packages around best companies, which allows us to understand a little better how our colleagues are responding to the challenges. And a big driver for us, certainly over the next 18 months, is simplifying our business model for colleague and for customer. Thank you.
Excellent. Thanks, Rob. And over to you, Rich, on the supplier side. It'd be great to get your perspective. Obviously, an introduction, but a bit of a perspective on what you see is going on at the market at the moment.
Okay, thanks, Brendan. Yep, I'm CEO of Mutual Vision. I've been with the business for nearly 3 years now, actually. And our main focus is providing a digital platform and digital ecosystem for our customers. As far as our customers are concerned, it's predominantly building societies. We've got 28 customers, 27 in the UK. That includes mostly building societies, but also some small specialist banks as well within the country. And we also work with other specialist lenders as well. We've got over half of the building societies in the UK using some of our capabilities, some of our platforms, and we're looking to expand that going forwards as well. We're quite a unique business, actually, within the sector, because we're a customer community-owned business. So we actually reflect the ownership model of the majority of our customers in terms of being owned by our customers. So we're actually owned 100% by 6 of our 28 customers currently, and that's something that we want to broaden as well. So we regard ourselves as the digital mutual, and we'd like to broaden that share ownership over time. And what we really provide is a core banking solution, broker solution, and online banking solutions to many of our customers. But the other real focus is to broaden that and enable our customers to use all the different technologies that are out there in the sector. So we regularly horizon scan and work with all of the different fintechs out there. There's 2,500 fintechs in the UK. So we really help our customers, particularly the smaller ones, to navigate all those fintechs and find the solutions that are best for them. Majority of our customers are very specialist, very niche, and that means that they need specialist and niche capabilities. So that's really what we help them look for. And as I say, it's a really vibrant community out there from a technology perspective at the moment. So we can really help them navigate that going forwards. Thanks, Brendan.
Fantastic. Thanks to everybody for that. So on to the main question, which is the opportunities presented by digital. You're clearly all at different stages. So I'd just like to get a bit of a perspective on what opportunities you see there and whether there's actually an opportunity cost of doing nothing. And I guess we can't ignore COVID and what's happened in the last 18 months and what that might have done to your thinking about how you approach this. So maybe I'll start with you, Will. Just what are the opportunities that you see that you haven't taken advantage of yet, and what's the imperative to act, I guess?
Gosh, well, I think the opportunities are massive in terms of digital. Like we said, across all aspects of our business, but the major opportunities that we see for us at present are the customer journey, and that's on both sides of the balance sheet for both our savings processes and our mortgage processes, in attracting new membership to the business, whilst retaining our existing membership. So there's huge opportunities. Rob spoke about mortgage retentions. That's something that we've invested in over a period of time, and just mortgage applications end to end. And just improving that overall experience for our member so that they can transact with us when and where they want to. So allied to that, we talk about the colleague and improving colleague efficiency, and taking the mortgage journey as an example. There's huge opportunities out there to enable more efficiencies across our business. and the mortgage journey is something that we've looked at in particular across all aspects of the sort of information gathering stage to support our underwriting processes. And that gives benefit to both colleague, member, and business going forward. So I think the opportunity cost of not doing it is we could be left behind. We need to remain relevant as businesses. So there is an imperative for us to keep up in the digital arena. Whatever areas our societies look to choose to invest in digital, I think it's all money well spent to a large degree, because it helps us keep up and remain relevant.
Okay, and Rob, the same question to you, but I suppose, is there anything different that you're doing there as well? As I imagine a lot is going to be similar.
I think that there are many similarities certainly in our approach. I think our approach, though, to dealing with digital is first and foremost linked to our business strategy. So it's very easy to see new technologies and the adoption of technologies. I think the cost of entry certainly make those things more affordable now. But I think the justification for us is largely around business model. So an example would be, we're still very much focused on our branch distribution. That's an important part of our business today and indeed moving forward. So in relation to digital, we're looking at technologies that support a high level of engagement, whether that's within our customer engagement, within our branches face-to-face, the prompts that those platforms can deliver for us, whether it's in the email reach that we do, whether it's in the insights to give us a better understanding of that, whether we're looking at mobile technologies and how we can look to connect with different audiences. And I think, a fundamental part of all this for us is we want our members to be able to connect with their society in a way that's most convenient to them. So if they want branch distribution, it's there for them. If they want online services, we can provide that for them. And indeed, if they want to move down the mobile route. I think one of the things that struck us, just in terms of, I guess, the opportunity cost of not being involved and not having that level of deployment was brought home to us to some extent through COVID. We had some disruption to our branch services. We transitioned to higher registration rates for our omni-channel. And that surprised us, I think, in terms of the rate of adoption that we saw from what was a very traditional building society customer base orientated around passbooks. And I think that has actually accelerated some of our digital plans. So I think across distribution, retail, how we engage with our retail customers is hugely important. Distribution links and mortgages similarly. For us, there's two aspects there. One is, actually, I think there are going to be minimum standards that lenders will have to offer in order to secure business. I think that's going to be really important. And digitalization of the mortgage journey is very, very evident, and it's going to continue to evolve. I think from a colleague perspective, one of the things that we're really focused on around digital is the support around assisted decisioning, consistency of decisioning, how we can streamline those processes, how we can accelerate the speed with which we can process requests from intermediaries and from customers. So that's going to be a big part. And I do echo what Will said as well. I think you have to stay relevant. I think different organisations will choose their own pace. And it stresses the importance, I think, of having high quality suppliers that you can link to that are prepared to collaborate. Thank you.
Understood. And I think that sort of is reflected elsewhere in the industry, that necessity is the mother of invention, and a lot of people have gone digital, have adopted digital technologies that didn't before. Tim, in your case as the smallest, does the landscape look different from an opportunity perspective, or is it just trying to keep up and trying to do the same thing? What's your take on this?
Yeah, I don't think the landscape looks particularly different, but there's a degree of reality that comes with not having pockets that are necessarily as deep as other firms, and that's just the way it is. I think, like I said earlier, we've favoured investment initially in solutions to increase the efficiencies and quite frankly insights and understandings of our society in order for us to start to move forward with more clarity. But we have made enhancements to our online offering, partly as a result of COVID, although we didn't see the same uptake as Rob. So I think that was really interesting to hear, actually. and obviously especially our intermediary systems that we're using at the front end. But honestly, in my view, the main opportunity for society when considering things like costs and budgetary constraints, and quite frankly, the resourcing capability as well, is for us to collaborate, and that's probably where mutual vision, so someone like mutual vision, comes in for us into the longer term strategy. But I think, in terms of the collaboration piece, it means for us they have, quite an intimate understanding. I think there's 24 relationships you have with other societies, Rich, as well. Correct me if I'm wrong. So the intimate understanding that they've got, and the issues that face other building societies, I think Rob and Will have alluded to that. There's a huge amount of commonality in terms of the issues that we're facing. It's just the question in terms of how long it takes you to get from A to B and what route you wish to take. And obviously, like I said, the reality is what the reality is. MV for me, again, certainly working more on the client side of things than any other software providers that I've seen. And I guess for us as a shareholder and a customer, we have the insight and we have the influence, and for what is for us one of the most key strategic suppliers. I think on the collaboration point and the kind of pooling of investment also means that costs can then be controlled. And once we have that truly open API layer in the middleware in situ, it does give us a larger degree for a small society of choice and particularly autonomy in terms of choosing the solutions that we then choose to implement that's right for us as a society, but probably more importantly, right for the members in terms of providing the services that they both desire and probably deserve. I think whilst you're digitizing the business and offerings that you provide for your new members as well, I think it's essential to stay true to the traditions that we hold as building societies, especially for the current demographics. So there's two splits here. There's the demographics, if you're thinking about our savers, which make the majority of our balance sheet up in terms of the 7,500 members that we've got. And they prefer that traditional approach. And like I said, we didn't see the transition to a more omni approach throughout the pandemic. But reality says, in terms of answering the sustainability question as well, that you need to attract a younger cohort of customers to ensure that your business has got longevity and sustainability in it as well. And I think that's where digital starts to weave into our longer term strategy as well. But I think your question, Brandon, around the cost of doing nothing was a rhetorical one. I think Rob and Will have both answered that. It's not a particular option. It's like I said, it's how long it takes us to get from A to B.
Yeah, okay, I understood. Rich, you've got a great kind of overarching perspective on all of this. What opportunities are you seeing building societies taking, and probably what opportunities are others missing because they're either behind the curve or not as well resourced, not as well informed? What's your perspective on this?
I think it really breaks down into sort of four areas, really. The first one I'd call engagement, which is predominantly about the members and the customers being able to engage more effectively with the society. So there is an increasing demand for mobile now, and we're working with partners on that, one of which is Consectus, who've already put a system into Tipton recently, a mobile solution. But it's also engagement in terms of automating the journey as well, making it more seamless and easy for the customers to engage with the society. So we've put in place things like a digital onboarding, which enables you to sort of deposit the funds, open an account, e-sign for the account, and do all the checks up front. So it all happens in one seamless run. And that's really driven quite a lot more uptake and throughput through the systems as well. One of the other societies I spoke to this week said they've seen a 5 times increase of their use of online banking since COVID. But also that's because we replaced a system that was perhaps less user-friendly for their members to use. And another society told me recently that they've seen a massive increase in their under 30s population signing up for new savings accounts since putting in the new online banking platform as well. So that really shows that it does make such a significant difference. And I think that's critically important post-COVID, that those sort of capabilities are there, because it certainly has driven an increased focus on the digital channel. I would say, though, digital is not everything. I know it's a bit of odd for me to say that from a tech company, but it's got to be only one of many channels. And it's really important that any digital channels that are put in place are personalized to the needs of the users. The second area would be automation, really. It's automating processes internally within the societies. So most societies see manual underwriting is critically important, but there's other areas where you're looking at affordability where that can be automated, it can be digitized, and we're seeing more input for that, for decision support, if you like, more demand for that. The third one would be integration with other technologies, and because we are a customer community owned business, what that means is we can be a lot more agnostic and sort of client side in what we're doing. So obviously we provide some of our own solutions into our customers, but we're also really keen to introduce third-party solutions and building that digital ecosystem, which can include offerings from companies that we would effectively see as our competitors as well. As long as it delivers benefit to the customer, that's the most important thing for us. We're a customer-owned business, so we haven't got separate sort of motivations to maximize dividends for third-party shareholders or anything like that. And we reinvest all the profits for the benefit of the customers. And then finally, it's intelligence. It's business intelligence, analytics, predictive analytics, I think will become all the more important. And given that we've got over half the building societies using our solutions, one of the things that we want to explore going forward is really providing sector-wide analytics, what's going on across the sector as a whole, because I think that will be valuable to all of the customers as long as it's a properly anonymized data. But that will give high-level insights as to what's going on across the industry as a whole. And another one of our recent collaboration partners that we signed up is Pan Intelligence to help us really leverage that kind of data that's held within our customers' systems currently.
So let me ask that to Will or to Tim. In terms of other things, have you considered anything else, or have you got enough on your plate at the moment in terms of the opportunities presented? I'm just thinking in terms of having this wonderful digital functionality to onboard clients. You know, you've got great data, you've got great access to them. Is there something else you could or would do if you had the opportunity? Tim, I'll start with you.
Yeah, I mean, fairly short answer, to be honest with you. So, I mean, we offer insurance and legal services, you know, which are pretty standard things across the sector. As far as anything else than that at this point in time, you know, it's something that is constantly considered, at least on an annual basis at strategy events with our board. But yeah, we've got enough on our plate at this point in time to be implementing and kind of perfecting before we could start moving out and branching out into other areas.
Sure. And Will, is that the same for you?
Yes, Brendan. Well, actually, we are looking into new opportunities, and in particular, a digital current account. So one of the opportunities in line with our strategy, as we've said, to become an exciting modern mutual, is to attract a new, younger demographic to the society. So it's something that we've been pursuing for a number of years now. But we believe the technology is out there and available today, and it's getting a full supplier managed service to launch that current account. But we do believe that going forward, to attract that younger demographic, we could be front of wallet rather than having a passbook, and sort of the younger millennials want to transact digitally with the society, but whilst maintaining that branch presence as well. So we see digital opportunities through the current account, the opportunity to attract and retain new members, as well as providing a great service for existing members. So that is a big initiative for the society that's ongoing at the moment.
Yeah, it certainly does feel like the technology has been a leveler. I think that's the word you use, Rob, in terms of giving people access. And you've already got, as building societies, you know, a ready-made customer group who know you. You're geographically proximate, you're culturally proximate to all of these people, and I often wonder whether there's more that can be done, but clearly it's with, you've got to divide the resources up. So having set out the menu of all the wonderful things that are available to you, clearly there are challenges, and that's the second half of this. So I suppose I'd start with you, Rob. What do you see the challenges are with digital transformation within your organization? And I suspect it will be things that are unique to your organization that the others will have different perspectives on. But I'm just interested in what you see the challenges are, because there are many.
It's really interesting, Brendan. I know when we first started looking at material outsourcing, which was back in 2017, and we were through and implemented by 2019. And when I look at Q1 next year, we're just about to sit down and start talking about service renewals with those key suppliers. So you get on the treadmill and it doesn't stop. And I think so that's really interesting. I think just in terms of how you plan those next stages. We have a reliance on incumbent suppliers, but we know that the world is changing very, very fast around us, and it's very easy to get distracted. One of the primary concerns we have is how to maintain our core services, our critical business processes against our technology footprint as it exists today, but how that's going to evolve. So I think that's a key challenge for us in terms of maintaining the high quality that we've already got, accepting that a number of suppliers will be changing their technologies. They'll be changing their hosting arrangements, and you're going into that cycle of review knowing that there's a heightened focus by the regulator in terms of what decisions organizations take. There is the pressing requirement around being able to link solutions across different suppliers. So that collaboration point, I think, again, is really, really key. But a key thing for us is that we're a business that is customer facing. We're very proud of the values that we have as an organisation. We describe ourselves as Marsden in a bottle. It's really important to us, and it's very easy to translate that in customer engagement where you're face to face. I think digital brings the different sets of challenges. You maintain your brand personality. To be able to differentiate yourself on the high street or in the digital. I think that's really, really important that we're able to use technology to actually amplify what we're really, really good at. I think when I look at resourcing, which is another area, I think, and certainly for us, there perhaps was a little misconception at the start that when you start to place reliance on third parties, that they've got the skills and the experience, the competencies to manage their technologies for you, but you still need that in-house capability to understand the basis of the technologies, the supplier management. That's going to be a growing requirement, I think, moving forward. You're seeing changes by the regulator in terms of the SMS functions, SMF24, chief operating, a key focus around operational resilience, cyber, business continuity, third-party relationship management. Societies can't abrogate their responsibilities to manage these services, and that's a big part of the digital journey moving forward. And it's very easy to be overly focused on the shiny and the new, the bits of engagement customer sees, but I think you have to get your pipe work right. That has to be resilient, because one of the key things that we've not touched on actually is confidence, and in customers using your technologies, you have to have great resilience in terms of how you're deployed. And some of that resilience comes from the collaboration and being part of the community. And as Richard's talked about, one of the key strengths that we stand by actually is that we like the association with other building societies. We like the association they have with core suppliers. And as a sector, I think you're starting to see some concentration now around building societies and core suppliers. And I think that's going to be, again, increasingly important for the future. And then I think, just to close on other challenges, we have a digital roadmap. I'm pleased to say it's actually been largely unchanged. I think partly because our digital roadmap looks at the 3-year horizon. We were quite ambitious in some of the services that we were putting into that. But I think you do come back to another challenge, which is, do your existing suppliers Does their roadmap and their development pace align to your business needs? One of the great things that fintech potentially allows you to do, providing you've got that collaborative supplier behind you, is that you can plug and play some of the fintech solutions, not to be permanent as part of your supply chain, but just to give you the quick fix. So the business opportunities that can generate, and I think sometimes that can be a bridge, can buy you the time for your core supplier. Their roadmap is more aligned to your business. So I think that's been quite exciting in terms of how you can plug and play different fintechs to provide sometimes quite modest solutions, but ones that actually remove some of the friction from your business. Thank you.
Yeah, and I think that's the way the industry has evolved, this ability to plug things in and plug them out quite easily. It just gives you a lot more flexibility about what you offer your clients. Tim, when we were doing the prep for this call, you talked about having to plan out 2 years in advance before you could hire the right people. So I'm interested in the challenges from your perspective, but I think that was a really, really interesting point.
Yeah, it was, and I think I think like Rob and Will, and probably all of the other societies that are kind of attending this, the commonality in issues is stark. We've been kind of looking at a 5-year horizon as opposed to Rob's 3-year that he talked about there. But you're right. For the first 18 months, 2 years of that, it was actually building the business up to a degree of sustainability from a balance sheet, from P&L perspective, so that we could start investing in it. And part of the investment obviously comes down to digital and software and implementation around that side. But the other thing is bringing talent in, being able to absorb the cost of bringing talent. It's not cheap to bring expertise, especially in the digital and IT space, into your business. But we've now found ourselves in a position where we're able to do that. And that will obviously give us a lot more clarity. I think the big thing for smaller firms, in my experience, I'm not a tech person, I'm a banker. I don't profess to be a tech person. So I think once that rolls into smaller firms as well, the underlying fact there is the fact that you don't know what you don't know. Rich mentions 2,500 fintechs earlier. That is a myriad of meetings to take, reading to do, just understanding, what the people are offering, what the fintechs are offering in the first place. But more importantly, like Rob said, does it align to the vision, the values, the ethics that you hold as a mutual building society? That's probably as important when it comes to making these type of decisions. I think COVID has certainly sped the thinking up, and the thinking's now become action for us, and it probably has for a lot of other smaller firms now. I think there's a few reasons for that. I think the cost benefits over the medium to longer term are clear to see. Relevance is a huge part of that as well, and I think Rob alluded to it earlier. Member behaviours have had to change. They've been forced to change their behaviours in terms of the way they interact and transact with us as business as well. That's been forced by the pandemic. The efficiencies in the business are hard to ignore, but it comes down to, again, what we were talking about, how deep your pockets are. But I think what the wider banking marketplace, financial services marketplace is doing as well is something you need to pay extremely close attention to, because it comes back to that relevance. Even when you look at the disruptors within some intermediary space at the moment, the Habitos, the Trussels, the Money Parks, the Molos, to name but a few as well. If you're not looking to adapt and develop the relationships within that side of your business, then it can be pretty tough to remain sustainable moving forward. So, all of those things, when you wind them up, become pretty compelling in terms of action. But I guess for us, where I sit, it still comes down to balancing the strategic priorities, understanding and being able to navigate through and around the budgetary constraints and spending plans you have, whilst maintaining the delivery of your BAU objectives in terms of keeping the kind of cogs turning. Rob's right, the regulatory view is really changed. We're starting to look at implementations, and the conversations that I've been now having with the regulator have fundamentally changed, might say for the right reasons. But yeah, operational resilience and the regulators kind of keeping a keen eye over the changes and transformations that are going on amongst the society as well is absolutely huge. And I think the bigger thing as well is when we put something in, plug and play, to use Rob's analogy, are we doing it for the right reasons? Is it going to remain relevant? Is it doing what our current demographic of membership look like? And the question is rhetorical in terms of what we're looking to attract moving forward, but the last thing you want to do is to start to alienate and kind of push people into a pen that they're not necessarily wanting to be. So yeah, I mean, challenges are huge. I look at a lot of the challenges when we talk these out, listening to Rob there as well, thinking about what I'm talking about, and they're very, very easy to turn into opportunities. But it's like I said earlier, it comes down to realistic but stretching timelines in terms of implementation.
Yeah, that makes sense. And Will, is there anything that the guys have missed from a Monmouthshire perspective that you see as a challenge, or is it a sort of similar array?
Yeah, it is a similar array of challenges, Brendan. But echoing what Tim said, we've got finite resources as an organisation, and we need to deliver what's going to almost give us bang for buck in terms of our strategy and deliver for our members. So we've got member-led propositions that we're keen on implemented, but you can't do that from the side of a desk. So one of the major challenges that we've already spoken about is almost having the infrastructure in place to deliver change, and we've invested a lot in our business over the last 12 to 18 months in building our change capability in order to deliver our strategy and a number of the digital initiatives as well as other initiatives that the society is looking to progress. Bringing that capability in is difficult. We've highlighted it. We're a regional-based building society based in South Wales. A lot of the skills available are not in our local area, so actually attracting the resource to come to the Monmouthshire is quite difficult in times. But COVID has probably presented us with an opportunity with the benefits of home working now. So we have been able to attract resource into the business. And I think the other way to overcome that is to sell our business. I think Mutual's in a really good place in terms of post-COVID life. Millennials want to transact with purpose-led businesses. They want to give something back. And I think building societies are in a really, really good place to take advantage of that, because it's what our sort of core purpose as businesses is to give to our members and communities. So huge challenges out there. You know, we're operating in a very, very tough macroeconomic environment with, you know, some massive organisations are our competitors for mortgage lending, and they've got highly advanced digital capabilities. But the actual integration and collaboration that firms like MV offer do support us in those challenges and can help us sort of navigate through what Tim said, the 2,500 fintechs to pick the right businesses that support your business. Our business on everybody's individual sort of change journeys. We've all got different strategies. We're all sort of looking to achieve the same thing for our business, which is ultimately long-term sustainability and growth. But it's almost having organisations like MV who share a similar purpose and values as our organisation that help us almost navigate our way through that battlefield. So huge challenges out there, finite resources, I would say, against, you know, big change opportunities. What is going to give you the biggest bang for buck?
Yeah. Okay, that makes sense. And that mutuality point is never far away in these discussions, you know, and it's almost an extra burden that's placed on you that you have to make sure that that's there with every supplier, with every decision you make, and that I guess is what sustains the building society movement. Rich, from your perspective, again, with your helicopter view of all of this, what are the challenges that you see, and I suppose what are the challenges that you can help the building societies overcome, given your position in this?
I think, well, Tim and Rob highlighted the majority of them actually, but there's definitely a real key one there in my, which is prioritization. There's so much out there. I mentioned the 2,500 fintechs. We said that a number of times, but two and a half years ago when I first got involved with the business, it was 1,600. But I bet it isn't another 900 on top. It'll be lots of those 1,600 and now don't exist. So it's backing the right horses with some of these technology providers as well. Some of them don't make it. They can't all be successful. So there's a key role for us, we see, as a strategic technology partner in trying to work out which are the horses to back, and where we need multiple sort of partners in certain cases as well. That's quite an important aspect. And equally on that is having the flexibility to swap technologies in and swap technologies out, and that's where the integration hub is really, really important. That allows you to plug and play those different technologies in and out of the ecosystem when's required. Another aspect, though, that I think is really important is understanding the domain that we work in, and we actually help a lot of our tech partners to understand what it's like to have to work in a regulated sector. Many of them haven't in the past. Many of them need to understand the importance of operational resilience. I think Tim mentioned that, but also information security and satisfying the regulators and the auditors. We have a lot of activity and interaction with people like the PRA on behalf and in conjunction with the customers, but also the customers' auditors do actually come into our business and want to understand how we do business, because they understand that over half the building societies in the UK depend on some of the technologies that we provide. So it's really important to find the right technology partners that really truly understand the sector and know how to put the technologies in and how to support them as well. I think that's a key point, really, and that is a key challenge that does mean that you have to look at a smaller field sometimes of technology partners. I suppose the other aspect on that is really the resources, and I think Will mentioned that, and Rob. Resources, especially tech people, are very expensive now. They're getting a lot more scarce since COVID. It's certainly driven a lot more digitization and automation. So what we can do to a great extent is actually pool that resource on behalf of some of our customers as well. So we, in effect, being what we term as the digital mutual, we work in very much the same way as our building societies. So 245 years ago, building societies came about to pool investments of their members to be able to buy and build houses. We're effectively doing the same job, but with technology for the building societies themselves. And that's really how we work and how we sort of deliver that additional benefit. And that's so important when you're competing with the big budgets of much larger banks, and also the challenger banks that are very well funded sometimes. And sometimes you've got to collaborate on your technology enablement to be able to compete. So that I think is another real important point, a real important challenge that needs to be addressed, and applies actually to the societies as well as the small to medium.
Yeah, I think that there's probably commonality in the challenges. You mentioned that you're owned by 6 of the building societies. I think I have that right. Is there an opportunity for other customers of yours to become owners of yours? Because I can see the sort of the logic in being part owners of this, or are you stuck with the 6 that you have?
No, we changed the shareholder agreement back in 2019, actually, to enable more customers to become shareholders. We'd actually love it if every one of our customers was a shareholder, because that then makes the business model, the digital mutual model, perfect in effect. But there's no necessity for a customer to be a shareholder. It's there as an opportunity, as an option if they want to be, and if they are, then they get a seat at the shareholder forum. So that they can have that level of insight and influence. The shareholder forum meets every 6 months, and then they have a representative, either 1 or 2 representatives actually in terms of non-executive directors, that then sit on the mutual vision board to represent the interests of the customers, but also for us to feed back to the shareholder forum what we're seeing from a technology perspective. So it is very much a symbiotic relationship between the two. The shareholders and the tech company, because it's a two-way benefit, really. Yeah. So just to answer the question fully, we are actually talking to a number of our customers at the moment about becoming shareholders. So we're doing an investment round this year, and we're planning on probably doing another one next year as well, actually.
Okay. I'm being prompted here, and I can't believe that the time is already nearly up. It shows that we've actually had a really enjoyable conversation, because I think we could keep going for a while. But on the basis that I do need to draw to a close, maybe I'll leave the final word with the CEOs of the building societies. I'd love to kind of just get your one line on what the state of the small building societies is and what your kind of future outlook is for your own building society and the smaller building societies, given the threats out there, the challenges of digitization, the opportunities, but the competition as well. So let me start with Tim.
Yeah, there's a lot to get into one line, Brendan. There's absolutely, in my view, a place for small mutuals, building societies, who can remain agile, who can remain aware, who continue to provide relevant products, services, and the type of experiences that makes it compelling for the members to retain that relationship in what is, let's be completely honest, and we've all alluded to it, an extremely competitive marketplace, and that's not going to change anytime soon. But I'm absolutely convinced that there is a place for us all.
Excellent. Will?
Yeah, thanks, Brendan. It's clearly a challenging operating climate for our organisations to thrive, but I think as we've heard throughout the conversation, embracing digital and leveraging our business models and purpose to differentiate ourselves as organisations will help to ensure our continued sustainability into the future. I think opportunities with businesses like MV demonstrate that digital isn't out of reach for our organisations, and I think collaboration could work for many organisations with the right technology partners, which will help all building societies on that digital journey.
Excellent, thank you. And that leaves the final word with you on this one, Rob.
Thanks, Brendan. I think for me, from a smaller society's perspective, be really clear what your business strategy is, set your path and stick to it. There's going to be disruption, but as building societies, we're very adept at dealing with disruption throughout our histories. It's an exciting opportunity to embrace some of the change that's coming. Don't ignore what your members are telling you about the services that you're providing. And don't be complacent, because the market is evolving and you've got to understand how that's going to impact on you as a building society and your business. Thank you.
Excellent. Thank you for that. I do think it's a great time to be a small building society because of the level of trust your customers have in you. And if you're leveling the playing field, to use that expression that's been used earlier with digital, I think that gives you the ability to compete and to stay relevant, which is great. So look, it just remains for me to thank the panelists, Rich, Tim, Will and Rob, for some fantastic content. I hope everybody who's been tuned in has enjoyed it. We will look at the questions and see if we can answer those and get back to you on them. But thank you and enjoy the rest of the conference.